Welcome to Inside the Vault Knowledge Hub. Join us as we answer all your burning questions, from precious metals to second passports and IRA investments. Each episode, we tackle a new topic and bring you insights straight from the experts. Let's dive in and unlock the knowledge together.
Welcome to Inside the Vault Knowledge Hub, where we dive into the topics our clients care about the most. Not only precious metals, but everything from second passports to IRAs and alternative investments. In each video, we will take a different topic and bring you the answers from the experts themselves. In today's episode, we're joined by Stuart O'Reilly from the Royal Mint. With a long history of excellence in precious metals, the Royal Mint is also at the forefront of innovation in bullion and precious metals investment. Stuart brings with him deep knowledge of the gold market and the evolving role of physical and digital precious metals in today's unpredictable economic landscape. Stuart, welcome to the show.
Thank you. Good to be here.
It's great to have you, and I want to jump in right out of the gate talking about the Royal Mint. If you can give us, a snapshot of the history of the Royal Mint from, inception to where we are today. Just tell us a little bit more about the Royal Mint for our viewers.
Yeah, no problem. A snapshot's always tricky. We have 1,100 years of history, so you can imagine condensing that down can be quite tough. The Royal Mint's foundations, though, were in the Viking Age. So we trace our history back to a silver penny that was created in the reign of Alfred the Great when they were pushing back the Vikings who'd invaded Britain. And so right from that first moment of inception of the Royal Mint in the year 886, we've worked with precious metals. And obviously for most of that time as well, precious metals were actually just part of circulating currency, first in silver and then gold coins started to circulate. We've never had platinum coins circulating in the UK. But then really with the 20th century, precious metals start to be removed from coinage. But there was still very much a role for precious metals in the global economy, in investors' minds, for central banks, for jewelry. So we continued, obviously, to work with precious metals. And some of those products that we have on sale today, and we still produce today, have some really long history. So the sovereign coin, which is still produced today, has a 500-year history, dates back to the reign of Henry VII, the Tudor monarch, the first Tudor king to take the throne. And really, it was a way of showing off. It was a way of saying, look how powerful I am. I'm as good as any monarch in Europe, is essentially what the message on that coin was. And today, we produce bullion coins for investment purposes. We store bullion on behalf of institutions and private investors. And we actually also make jewelry. So we strip precious metals out of e-waste. So we're talking printed circuit boards that you find in your phones and laptops. We take that apart, you reuse all the materials, and then the gold will form necklaces and earrings and bracelets and cufflinks. And we actually produce products out of X-ray silver as well. So silver's used in X-rays, and we strip that silver out and produce jewelry with that.
That's actually very interesting. I didn't know that. And that kind of plays into my next question here. I was going to say, with that storied history, moving into, a more modern world, how do you balance that legacy with the need to innovate and, using e-waste, for example, to create jewelry is quite interesting. To kick us off, and keep us moving here, can you share how the Royal Mint's role has evolved over time from a classical safe haven, asset into today's digital markets? Is that, something that the Royal Mint really takes advantage of in this day and age?
It is, yeah. I mean, all of our products are ultimately backed by physical metal. So when we talk about kind of digital markets and you think about products on the stock exchange, the metal that sits beneath the products is stored at the Royal Mint. So we have a product on the London Stock Exchange and lots of other European exchanges as well, which is an ETF. And that gold sits in the Royal Mint's vault, is outside the kind of banking system. No other ETFs store their gold in the Royal Mint and outside the banking system in London. So that's a key part of our products. And I said the gold is all there. It does physically exist. And the same with, we have a DigiGold product, we call it. Again, sounds digital, sounds like maybe it's not there. The gold bars sit in our vault, and we just sell it in a slightly different way. So rather than selling entire bars, and if you imagine the bars that back an ETF or the bars that back our DigiGold product are 400-ounce gold bars. They're the big gold bars that you see in the movies and central banks trade. They're well over $1 million in value, so out of reach for most people. But what we're able to do is to sell fractions of those gold bars. So we know exactly how much gold is there, and we can sell you from as little as £25. And on the stock exchange, it's a kind of similar value, and it works in a similar way, really.
Yeah, and again, you're taking the questions out of my mouth. This is great. We're seeing more, ETFs, tokenized gold, if you're, familiar with the blockchain. In your view, which format, physical or digital, offers the most durable value proposition? And what is the difference between, being invested in an ETF or tokenized gold versus owning the actual physical bar to you?
I think it's always really important to understand exactly what it is you're investing in, be that kind of physical bars and coins, or be that ETFs or DigiGold or tokenized gold. So it's really important to make sure you understand exactly what it is and how you gain exposure to the gold price. In the UK, there might be certain advantages of investing in certain ways, depending on what it is you're trying to do. So we have something called an ISA in the UK, an individual savings account. It's a tax-advantaged way of saving. Now, an ISA can't hold physical gold bars, but it can hold ETFs, so it can hold a gold ETF. Pensions in the UK, lots of pension schemes can hold physical gold bars, but they can also hold ETFs. But with those products, what you're getting is exposure to the gold price. And yes, the gold's there, but it's not quite the same as owning the physical gold. And the advantage, particularly in the UK, of owning coins, physical coins, owning them outright, is you get a capital gains tax advantage. So that if you make a profit on those coins, you do not have to pay a tax on those profits, essentially.
Yeah, and I mean, we see that with our UK-based clients, obviously the Cayman Islands being, associated with the UK. A lot of those clients are looking for that tax advantage. They're buying, Britannia coins for that reason in particular. You mentioned something about, retirement accounts and savings accounts. Recent surveys actually suggest that millennials and Gen Z are increasingly curious about gold, which, may come as a surprise to some people. What do you think is driving this trend, and how is the Royal Mint catering to these younger buyers?
Yeah, it's interesting. And we saw those kind of headlines. They've been around for a few years now about younger people particularly being interested in precious metals. And to be honest, initially we were a little bit skeptical. The rest of the media seems to be telling us all about NFTs and crypto and all these other things that are kind of just exist in the digital space and don't really have anything tangible behind them. So we went out and did our own surveys, both as the Royal Mint and actually independently, so that it wasn't clear that it was the Royal Mint who was asking the questions. And we actually found exactly the same thing, that, yeah, the younger generations are increasingly interested, and actually more interested than some of the older generations, in owning physical, tangible assets. And it's not to say that they're not interested in Bitcoin and NFTs and other cryptocurrencies. They are. They're just interested in gold as well. And when asked why, they tend to value gold's history. So they like Bitcoin because it's a little bit speculative, it's a bit new, it can be a bit volatile. But they like gold because it's got a very long history of relatively stable returns, and it's seen as a safe haven. So it's just a different role in a portfolio, I think, and younger people are starting to see that. And then obviously they're not buying 1 ounce gold coins by and large if they're 18 years old. So it's a lot of money to fork out for that age. But they're buying smaller products. So they're buying fractional coins, so half ounce, quarter ounce, tenth of an ounce. They're buying small bars, 1 gram and 5 gram, particularly popular. And they are buying some of the other more fractional products like DigiGold, as I mentioned, and gold ETFs.
Yeah, and we've seen similar, and it's interesting that you mentioned Bitcoin there. We accept, cryptocurrencies for payment and remit payment in crypto. And we're seeing a lot of these younger investors that maybe, did quite well on Bitcoin, for example, and they're going, okay, I want to sell a little bit of that and take some profit, and they're moving into gold. So I think, it's interesting that you guys did that follow-up study and found the exact same thing, because that's what we're seeing as well. Because typically, the average age of our client base would skew a little bit higher, but we're starting to see those younger people come into the market wanting to hold the physical asset. And I think it also boils down to, a lack of trust in the, current state of the global financial system, geopolitical issues. They're wanting to protect the wealth that they have earned over time. So yeah, it's an interesting trend, and we'll see, if it continues over time. Speaking of that, as a matter of fact, my follow-up question, and is quite pertinent in today's day and age, gold has weathered, obviously, countless crises over time, pandemics, wars, market meltdowns. What lessons does its historic performance teach investors about risk management today?
I think it's interesting, particularly in the West, that one of the most kind of powerful points about why you should own gold is its diversification element. And if you look at some of the major instances that's happened in the stock market that have caused the stock market crash, so the Great Recession in 2007, 2008, for example, the sovereign debt crises in Europe, Brexit in the UK, you had dot-com bubble in the early 2000s. All of those things saw stocks tumble pretty dramatically. And in all of those instances, gold went the other way and grew in value over the same timeframes. So it helps to balance out a portfolio. And it's interesting, though, that I think that we sometimes forget that in the West. And I think 2007, 2008 was a bit of a turning point for central banks, and a bit of a turning point generally for the broader gold market, when people realized that there was a value of owning gold in the portfolio, and that safe haven, that diversification was really needed in investment portfolios. Whereas previously it was kind of seen as a little bit outdated. Who needs gold anymore because we've got tech stocks or whatever else it is. And it did mark a turning point. And I think we seem to almost forget it in probably 2016, 17, bit of a slower market. And then COVID catapulted gold demand again, because I think it reminded the West again that there is a real value in owning gold, owning something that works differently to stocks and shares and is kind of inversely correlated to them. But in other parts of the world, that's just ingrained in their cultures. So in East Asia or South Asia, gold buying is pretty regular. In fact, they don't chase the price like people tend to in the West. They tend to look out for a bargain when the gold price seems a bit low and looks like it's offering value, and they'll jump in at those points, rather than, I need a safe haven quickly because something's going wrong, so I'll jump on the gold price like everybody else is. But it's got this really long history. It's been used as coinage for 5,000 years, and in every culture, every civilization, every time frame, every continent around the world, gold has always been highly prized. It's always been associated with stability and security and power and purity and all those things that I think we tend to strive for and seek out. And it's kind of almost like it's deeply rooted in human psychology. I don't know any other asset class that's quite like it. Land is obviously quite popular, cattle perhaps as well, a bit more difficult to invest in maybe. But gold has that, really long history that is unparalleled.
Right. And I had actually read a study, this was a couple months back now, where they were looking into how civilizations were able to, similarly value gold when they couldn't communicate cross borders. Africa wasn't communicating with, settlements in North America, for example, but they still saw value in gold. And the study concluded that human DNA is predisposed to gold. And it makes sense, we like shiny things, but, it just goes to show you that, for centuries throughout human civilization, we have attributed value to gold. It's one of the oldest, investment and monetary tools in existence. And it's interesting that it's kind of come back into the fore. You're starting to see it on, MSNBC. The news is talking about gold. All it took was, being up 30% in the last year for that to happen, but it has become, on vogue again. And like we just said, the younger investors and generations are looking into it. You mentioned something interesting there about central bank buying, and I wanted to touch on that as well. What's your take on this trend? I mean, last year we saw record levels of central bank buying gold. How does it reflect broader shifts in monetary policy in your mind?
Yeah, so we've seen 3 record years, or 3 very high years for central bank gold buying, over 1,000 tons a year for the past 3 years, and we seem to be on track this year for that as well. I think it's over 220 tons bought in the first quarter, so there or thereabout on track for a similarly kind of elevated year for central bank gold buying. And central banks are really slow to change policy. So there was a period in the 90s and early 2000s when they were selling gold. And it was almost as if everybody was selling gold constantly, and that was just part of the market. In fact, lots of banks were selling gold to such an extent they had to sign an agreement with each other not to sell too much gold all at the same time because it would depress the price. And then fast forward 20 years and suddenly it's the opposite is true. Everybody's buying gold. And it's not confined to one particular group of countries who might share some characteristics. There is buying in Central and Eastern Europe, particularly countries where they operate their own currency, so they're outside the Eurozone, but they are in kind of Russia's vicinity, countries like Poland and the Czech Republic and Georgia. So they're buying perhaps for that reason. China's buying huge amounts, and the data coming out of China isn't always particularly reliable. So we don't know quite how much they're buying, and maybe they're buying more than they claim they are. You've then got countries who are the kind of traditional non-aligned countries. Some of the Middle Eastern countries like Qatar are buying gold because it's seen as a way to be able to trade with partners who may be cut off by international sanctions. Russia being the obvious one there. So Russia was cut out of the SWIFT system, the international monetary system, if you like, when it invaded Ukraine. And it avoids some of those sanctions by using gold. And increasingly, I think there are countries who are worrying about not necessarily whether they will be sanctioned, but whether they will want to trade with somebody who's sanctioned in the future. And so what we're seeing for the first time since the introduction of the euro is gold is now the second biggest asset held by central banks. The dollar is still the biggest asset, but its share of central bank reserves is decreasing and has been for a number of years now. And they're not really buying euros or pounds or Swiss francs or Japanese yen, which are the traditional currencies you might expect them to buy. They're buying some of the kind of less obvious currencies. So Canadian dollars, South Korean won, Chinese currency, but none of those are really fully what they're after. They can't make up a huge portion of anybody's central reserves. So they're looking to that neutral asset, which is gold. And I think that's going to continue for a long time. There was just a survey out recently published by the World Gold Council, and they ask the central banks their policies and do they think they're going to be holding more gold in the future, and do they think everybody else is going to be holding more gold? And it's the same story, but even more extreme, if you like, in terms of what central banks think is happening. And nobody's saying they're de-dollarizing. It's the interesting part. All the banks say, no, it's not a policy of de-dollarization. We just like gold for all the same reason that retail investors like gold. We like gold because it's a good store of value, it performs well in a crisis, and it diversifies a portfolio. And yet, the world seems to be de-dollarizing. It's just nobody seems to want to admit it. It's interesting. And I think it's one of those things where it's kind of gathering steam. And it takes a major global event or huge shift in policy, I think, to change that.
Yeah, it's interesting. In the conversations that we have, it always seems like it's one of those, well, where there's smoke, there's fire. All these central banks are buying because of some cataclysmic event that's around the corner, or, de-dollarization measures. What you kind of said there is, there's some more practical reasons just sound monetary policy perhaps at play as well, but it feels like it's a little bit of both kind of thing.
At the same time that you're seeing countries ask for their gold back from overseas storage. Traditionally, a lot of gold is held in London, a lot of gold is held in New York. And over the past 5-10 years, there's been increasingly loud noise from some countries to repatriate that gold, to fly it back from New York or back from London into their own central bank vaults, which is interesting. I think it lends to that de-dollarization story. Why would you need that gold back? It's difficult. It's logistically a nightmare to move that much metal. The weight and the value of it alone is enormous. And then you've got to find somewhere to store it and look after it when you might not be specialists in doing that. But they want it within their own borders.
Yeah, point taken. I mean, that particular point is very interesting as well. We'll see how that continues to develop. But yeah, it does lend its hand more to the de-dollarization aspect of things, which is quite interesting. And it's something that our clients watch quite closely, central bank buying, and it kind of helps them make their decisions. For someone looking to add gold to their portfolio, maybe as a first-time investor, what, entry points, and you kind of mentioned, maybe not watching the price so much and just dollar cost averaging in, for example, but what entry points or strategies do you, personally recommend for first-time investors?
I think it's take a broader view is probably the best thing, as you just alluded to. There was a lot of activity in the market. I think over the past 24 hours, the gold price has dropped about 2.5%. It's the 24th of June, by the way, is when we're recording. So the gold price has dropped about 2.5%. And people are wondering, does that mean the end of the gold bull run? Is it now a good time to buy? Well, actually, gold's still up 25% this year. So in the grand scheme of things, okay, it might be slightly cheaper to buy right now than it was 24 hours ago, but it's still up 25%. And the history of gold shows a clear movement in one direction. Now, it doesn't always go up, obviously. It can fall. But I think with anything, obsessively watching the price actually probably leads to people missing out more than anything, because you're too worried that, I want to set a price at, I don't know, $1,000 below where it is now, and it may never get there. So I think it's about taking a broader view of your whole portfolio and understanding what role does gold play in that? What am I looking to get out of an investment in gold? And that will dictate both your choice of product, be that coins or bars. It might be, you might want fractional coins because you might want to sell them one by one to have that kind of liquidity. Or you might want large bars because you just want something that is closer to the spot price. You might want to buy it in a certain way because it gives you a certain tax advantage in a pension, for example. So look, it's really about thinking about what it is you want gold to do in your portfolio. And then you can decide, I think, is now a good time to buy, and which form do I buy it in?
Yeah, and I've had a few of these conversations in recent months, people who onboard as clients with us, they say, I'm going to watch the price a little bit. I spoke with one client last week. She came to me and she said, I really wish I had bought back at, $2,700 an ounce, but I just panicked because, why buy at all-time highs? And it's one of those things, dollar cost average in, set a plan, stick to it. With something like precious metals, like you said, this is, a zoom out kind of thing. Over time, you will be fine. It's not like having to watch the stock market, on a daily basis and time your entries there. This is an asset where you're, in wealth preservation mode, and it is something that you're not necessarily putting 100% of your savings into. But it is there as that tool to help you protect yourself. And I think, the points you made, we echo on our side as well as sound investment strategies for, first-time investors and, seasoned precious metals investors alike. I wanted to move that into more about the Royal Mint and some of your products. You're known for your quality and craftsmanship, obviously, but also the practical benefits of the products, which we spoke about, from a tax savings, example. What sets the Royal Mint bullion and coins apart? And I wanted to actually ask you more in particularly about some of the security measures, because I know that you guys have some really innovative security measures in some of your products.
Yeah, so we introduced security features on the Britannia coin in 2021 for the first time. And we did that because there were lots of surveys in lots of different countries, and trust came up as a major barrier for why people are nervous about buying gold. If you imagine, walking into the gold souk in Dubai or a market in India to buy gold, you might not know who the Royal Mint are. You might not know what a Britannia coin is. But if you can verify that coin has been made by a world-leading manufacturing institution just with your naked eye, so you don't need any machinery, any special equipment, you can see on the coin, because of the features that are on that coin, that has been, that's not a counterfeit product. You can't just make that in your shed and make it look like gold, spray it with gold paint or something. So the features that we've got on Britannia, on the coins behind the figure of Britannia herself, we've got what's called surface animation. And if you move the coin in the light, it looks like the waves behind Britannia are rolling. And they're created with what's called a picosecond laser. And it's a laser that is 1,000 times thinner than a human hair. It's a really specialist laser. And it's created a pattern, so obviously it plays with the light in a certain way. And that's not something that you can pick up particularly easily in the open market. It's got a latent image on it as well. So if you move the coin one way, you'll see a padlock. If you move it another way, you'll see Britannia's trident. And it's got microtext. So the microtext reads Decus et tutamon, which is an inscription from some old British coins, which reads an ornament and a safeguard. And it was one of the Royal Mint's first security features, actually. It was originally around the outside of a coin to stop people clipping the metal off around the rim of a coin and making it look as if the coin is still intact. And it's that, I think, that sets it apart. It's that you could take those products anywhere in the world, and they don't have to know who the Royal Mint are. They don't have to know what Britannia bars or Britannia coins are. They can verify that product is what it says it is because those features are so high tech. But they can do it with a naked eye and not with a specialist bit of equipment.
Yeah, and they're gorgeous as well. And I particularly like the rolling waves on the Britannia coin. I think it's a really nice touch and quite striking feature as well. We're very excited. Obviously, we've already announced, but a partnership with the Royal Mint. We're very excited about it. I wanted to ask you, obviously we've brought in some new products, some Britannia bars in 1 ounce, 50 gram, and 100 gram increments. I'm just curious, if you can share any more about the partnership and where we're headed in the future here.
Yeah, look, we're really excited to be partnering with SWP. We've kind of been aware of SWP for a number of years and kind of watching your content, your podcasts and some of your video content for a long time. And I think it's a great proposition. Storage in the Cayman Islands is obviously very attractive for some people who are looking for that kind of safe haven appeal of gold, but also a safe haven of the custody in the Cayman Islands. We can see why that might appeal. And in terms of the bars are a brand new product for us. We had Britannia bars previously. We've updated them with the security features. And they have the same security features I mentioned that we introduced on coins a number of years ago. But actually the bars kind of take it to the next level because the packaging on the bars also adds to the security features. So it's got like a UV film in the packaging. If you shine a UV light on it, you'll see the Royal Mint written across the packaging. It's tamper-evident, so if you tried to open it, you'd see the seal would break and you'd know the seal was broken. Obviously, it doesn't mean that the product isn't genuine, if the seal's broken, but it might be worth double checking in that instance. And it's got a little QR code in the top corner as well, which you can scan, and it will verify that product for you. So you've got all the security features on the bar and all those security features on the packaging, which make it probably the most visually secure bullion bar on the market.
Yeah, and they're beautiful as well. I mean, typically the level of detail and artistry, I guess I'd say, is you see that more in coins than you do bars. But these, 1 ounce Britannia bars are stunning as well. A beautiful product, and we're very, very excited to offer them at SWP now. We're excited for this partnership and where it will continue to go. I want to thank you very much, Stuart, for joining us today. Appreciate your time and look forward to speaking with you again soon.
Thank you so much.
Thanks for tuning in to Inside the Vault Knowledge Hub. We hope you enjoyed today's episode and found it to be insightful. Be sure to subscribe and share your thoughts with us. Join us next time for more expert advice and answers to your questions. See you next time on Inside the Vault Knowledge Hub.